Welcome back. Hope you're having a good morning. Well, global cues are a little bit subdued, and that's why the Gift Nifty is suggesting we pull back closer to around 25 to around, now 16 points or thereabouts. I think the gash could be a little bit deeper to kickstart trade. But plenty of stocks to discuss. Prakash Diwan joins us for exactly that. Hi, Prakash. Good morning. Hope you had a good weekend, Prakash. Well, let's start off with the top stock, Avenue Supermarts. Those numbers look a little bit disappointing. Because of their product mix, the gross margins, that's not able to perk up. Valuations are not cheap as well. How do you approach the stock from here on?
Good morning, Nigel. So I think the Avenue Supermart numbers very clearly tell you where dynamics are changing within the retail segment. If you look at some of the sub-segments where they've actually not been able to get pricing power, it's thanks to the competitive intensity that's coming in from the likes of Zudio and now possibly one of the new initiatives from Reliance Retail as well. So that's the space that's hurting quite a bit. Whereas actually in an inflationary environment, if there was anything that would have got impacted, it should have been the top line, which doesn't seem to have happened. So volume growth, revenue growth, both seem to have come in place, but it's actually margin. So their ability to be able to price themselves superiorly as compared to the other offerings or other offers is probably waning a bit. So I think the market will probably start wanting to relook at the kind of premium valuation that has always been accorded. I always believed it's a great franchise, great business, but the low floating stock has kept prices up. The kind of holding pattern that you have, nobody wants to get out till there is some sort of a structural secular trend that's kind of evident. And it's too early to say that, but this probably could be the beginning of a little bit of a softness in the margin profile. And if the revenue also starts kind of lagging, you'll probably see a much more faster, disappointment of sorts getting baked into the prices. So what do you do at this point? I would book profits if I were, holding on for so long, because it probably is too range bound to give you any kind of a delta from here on.
All right. We also have plenty of numbers that are expected right through the course of this week, Prakash. Let's get down to that. Today, the big one will be HDFC Bank, of course, and it's the first one post the merger. The stock has been a huge underperformer. Do you think there could be any change in that trend?
Good morning, Sonia. So I think importantly, a month back, probably 5 weeks back, where the management addressed the market, analysts and kind of tried setting expectations right. Post that, everything's probably priced in. I mean, I don't think you'll find any deviation. In fact, all the worst, sentiment from the numbers would probably be in this quarter, because the transition is going to take its toll. There's a lot of things which would have to get ironed out in terms of the efficiencies coming back and things like that. So growth, efficiency, margins, all of that will probably reflect in this quarter's numbers, which will probably be tepid. But I think the market might not get more disappointed from these numbers. So I would believe, this is an endorsement of the fact that it will be probably a U-turn that will take in terms of where it is on metrics. And this could probably be the first quarter where that indication will get endorsed. But from here, you could probably start seeing improvement, even if it's incremental and very gradual, you will start seeing this. So it's kind of a bottoming out quarter that I would anticipate from the numbers of HDFC Bank.
Prakash Diwan is still with us, so let's get talking to him. Prakash, I wanted your thoughts on how to approach Tata Motors now. It's had a dream run, right? And now unlocking more value for shareholders by selling stake in Tata Technologies. Is it too late to jump in, or do you think there's lots more to go?
So the answer is yes to both, and why the paradox? Because it might not give you, the same kind of a run that it has in the last 12, 18 months. But the next big milestone for them and all of this stake sale and all, which is helping them reduce debt, is going to help them attain the target of being debt-free. Now, that is a very strong situation that they can find themselves in. Any kind of vulnerability in terms of market share gains or losses will probably, set that off if you're light on the balance sheet. So I think from a structural standpoint, it still has much more to go, but you might not get the same kind of gains immediately. So buy on dips. The market is still very, nascent in terms of EV vehicles, and that's where core focus is. And they could be able to raise some money at very, very significantly rich valuations. So that will come in handy also. So I think you'll probably see it consolidate a bit. but then it will continue to move. But buy on dips is a much better way, Sonia, than jump into it at, because if it corrects, it could probably be at least another 15-20% from here. So that might be a bit debilitating. So I would recommend a buy on dips and hold on till the next 2 years at least with a 2-year horizon. Definitely you'll make money.
Prakash Diwan is still with us. Prakash, how do you approach these names? Names like, say, an Asian Paints or, even some of the tyre makers have actually been doing very well. Volume has picked up. Demand has come back in a big way. But now this higher crude prices could perhaps put pressure. What do you do here?
I think that will probably be an opportunity to buy in because the impact of crude is usually temporary. And I'm, making a big assumption that post December, Jan, you probably see a little bit of a softening come because of the slowdown in demand or this whole winter stockpiling probably not being such a big issue. But remember one thing, that some of these companies are also, facing a lot of issues in terms of the incremental demand that they are expecting from the festive season. So more will depend on that than the crude. The crude is probably a temporary dampener. I would definitely buy on dips, particularly some of the airline businesses which are doing so well, and Indigo is, of course, the one that I'm talking about. On the paint side and some of these other derivatives, there's a huge choice that's available. Some of them which have not done well in the past could probably start doing well given the kind of mix that they have, the price points that they're catering to. So I look at something like Berger rather than Asian Paints at this point in time.
All right, Prakash, I wanted to ask you about this name, Skipper, the T&D company, and it's done well in the past, and then we saw a sharp correction on the stock. But it appears interest is back as that stock has been moving up, and over the weekend they won another order of around 500 crores. 2023 actually has been the year of order wins. The street is getting very excited about order wins without looking at execution or the working capital requirements as well. How do you see this stock play out? It's at around 230 rupees.
So, Nigel, I think if you look at the longer history of this stock, even there you have enough volatility to dissuade you from believing that things are going to be very smooth going forward. This order book investing is getting to be a bit difficult for people to understand. It started with the railway stocks, started with the defense stocks, where the translation or conversion ratios are very different. But in infrastructure, there could be so many slips. And I can give you so many other names. There's a company called Ashoka built one, has a great order book, 17,000 crores plus, market cap of just about under 4,000 crores, P multiples of just 10 plus. So, you'll find these situations, but execution and, lumpiness of earnings, the quality of earnings is much more important as well. So I would refrain from buying into these names just because of the, activity around that in terms of the order flow. You would rather wait to look at some sort of a secular trend from these companies and the earnings quality to go up to buy it.
All right, Prakash, thanks a lot for that. And thanks for joining us. We have the